There you go. So I just want to welcome Mohit Masan this morning. He's a mortgage agent that has come and spoken to my office previous before. So I thought I'd introduce him to you guys, and hopefully he can be a good resource for you guys to use. He's going to talk to us today about making sure our buyers qualify for mortgages prior to doing our deals. So thank you very much for joining us, and welcome, Mohit.
Thank you for having me, Christine. Thank you. Hi, everyone. Thanks for the introduction. So yes, my name is Mohit Masan, and I work with Dominion Lending Center's Affinity Mortgage Solutions, which is a brokerage. We have our office in Markham and Brampton. What I wanted to talk to you guys about today was this process that I've come up with, which helps my realtor partners ensure that there's more confidence before going and buying a property. There's a chance of getting your mortgage approved, and ensuring that there's peace of mind. You don't have those last minute stressful situations where your buyer calls you and says, "Listen, I can't arrange financing." I had turned it off. Wow, that's interesting. My phone was on silent and it's still ringing. New phones, right?
I didn't hear it.
Okay. Super. So I'll tell you a story before we start. So I recently had a first-time home buyer. He called me up and he was like, "Oh, I found your number on Google and I want you to help me arrange financing for a property that I've purchased." It's like, super. And he's like, "I am a first-time home buyer," like I mentioned. He bought the property for $800,000. He said, "I've got 5% down payment and my salary is about $60,000. My credit is phenomenal. It's over 800. I do not have any outstanding liabilities." Now, when he said all that, the first thing was, it's like, "That's fantastic. And I see that you bought the property. Is it conditional or is it firm?" And he said, "Oh, I bought it firm." And he had not talked to any bank, any mortgage broker before going and buying the property. It used to happen back in the day. It's become less common, but it's still happening. But imagine the situation of this first-time home buyer is 25 years old, makes about $60,000. And if you've been in the industry long enough, you know that at $60,000, you're not qualifying for a property that's at $800,000 with minimum down payment. So that's the first thing. But I was like, let's address your down payment first. You said you've got 5%. Do you know that the down payment is 5% for the first 500, 10% for the additional amount? He said, "No, I don't know that. I've got $40,000 for the 800K property. I don't know if I can come up with any additional amount." It's like, you need the minimum, right? Which in this case would be 55,000. Let's talk about your income. It's $60,000. You're only going to qualify for, let's say, 300 or 350 mortgage. Where does the rest of the money come from? And ultimately, we did figure it out. We got him a co-signer. His sister co-signed and the deal went through. But you don't want your buyers to be in that situation where they're struggling to arrange financing after the property has been purchased. Because not only is it stressful for them, it becomes stressful for you as well. And hence the process. So before I get to the process itself, I had a couple of questions for you to maybe contemplate about and see, if you've ever been in that situation. So before, you start showing properties to your buyers, do you know exactly what their budget is? Or is it generally a range? Because I've seen buyers saying, "Oh yeah, my budget is $600,000. What makes you think your budget is 600? Oh, that's what I can afford." That's fantastic. But the point is, would you get financing for that is the question you need to ask. The other question is, what are the assumptions? Now, this is new, right? So when any mortgage specialist runs a budget or an eligibility for your buyer, they run assumptions. So I'd assume, oh, this person is going to buy a freehold property. The property tax is going to be $4,000. The heat is $100 a month. Or this person is going to be buying a condominium. The condominium fee is going to be $400 a month, inclusive of heat, $2,000 property tax. These are assumptions that we are making. Now, based on these assumptions, let's say I assume this person is going to buy a freehold property, $4,000 property tax, no maintenance fee, and the budget is $600,000. You go get them a $600,000 condominium where the condo fee is $800 a month. You can only imagine what's going to happen because the eligibility will drop. So it's important that you think about it. What's my client's budget? What kind of assumptions have been used, right? And does that align with the property that I'm looking for my client? Do you know if your clients are able to place a firm offer or not? Because as an example, in the process that I've come up with, and I'll get to that in a second, we always discuss with the clients and the realtor partners as to whether this client can go firm or not. And that depends on how confident we are in arranging financing for that client. I can tell you, listen, it's a 50-50. Now, when I say it's a 50-50, you can think for yourself, and then the client decides as to whether they want to take that chance or not. But if you and I, which means the realtor partner and the mortgage specialist, have told the client that, listen, it's 50-50, we're concerned about a couple of things, and if the client does go ahead and place a firm offer, it's a decision that they take, right? At least we have the peace of mind that we've communicated and we've let them know of what this is and what the implications could be. Has the file been thoroughly underwritten? And what I mean by that is, what a mortgage specialist is supposed to do for your clients is underwrite the file before it actually gets underwritten by the bank. So basically what we do is we replicate that process that's going to be adopted by the bank, the underwriters at the bank, and then think of possible complications or problems that can arrive at the time of arranging financing. That's what we are looking for. And finally, do you have a specialist who partners with you to ensure that you have the complete peace of mind? With those questions out there, let's get to the process. So this is how the process basically looks. It starts with qualification. It goes to commitment email, documents, pre-approval, underwriting decision, your firm approval, and closing. So let me tell you how it generally works. So let's say if a client was to reach out to me and said that I want to arrange financing for an investment property that I'm buying, we'd say, fantastic. Let's have a phone call. So this is generally a 30-minute phone call to start, get introduced to the client, get to know their situation, get the information from them, and run their numbers. The objective of that qualification is to give them a ballpark. This number is never accurate because you know and I know that the information that the clients give you is not always accurate. Sometimes they don't even know what we can use, what we can't. To give you an example, I asked somebody, what do you do for work? And the guy says, oh, I am working with this company. It's an aeronautics company. Are you full-time permanent? Oh yeah, absolutely. Full-time permanent. Fantastic. What's your income? And he says, oh yeah, my income is about $60,000. Fantastic. I take down the information, run their numbers. When I get their documents, I realize that one, he's on contract. He's not permanent. Second, when he said 60, he was just assuming that, okay, these are the number of hours I work every week. I also do overtime. But on the letter, it said 40 hours into $20 an hour. That's much less than $60,000, right? So this number, the reason why we do this is because we give them a ballpark. And the ballpark is important because we kind of test the waters with the client. We're like, okay, your qualification is $700,000. And the client is like, no, I'm looking for a property of 1 million plus. I want a detached house. So that's the end of the story right there for you and me. So it's best to kind of run this ballpark first before we invest more time so that we know if it's going to even work for the client. There are cases where clients come to me, their qualification is only 400. You get nothing for 400. So you either think of an alternative for them, or you drop it, or maybe you snooze the deal and say, okay, come back to me after 4 or 5 or 6 months when things have changed. Maybe you found a new job or something of that sort. So that's where the qualification happens. Now, you'd be surprised in most cases when the clients say, oh, I've talked to my bank already, and this is what I'm eligible for. It's only based on step number 1. And we've already kind of discussed why this step number 1 is not foolproof. It's not comprehensive enough. This is just information from the client. So basically what happens in the process that I generally adopt is the next, where we send out a commitment email. So based on this ballpark eligibility that we've run for the client, we send out a complete email, which has details of their eligibility. It has details of what assumptions have been made to arrive at that eligibility, and what documents are required. to kind of process the file, take that forward. And lastly, what are the steps involved? So the steps would generally be, you send me the documents, you start looking for properties, I run a pre-approval, whatever it is, that'll include the steps in there. So the client is aware that this is not the final step. This is not my, go-to information to start looking at properties or putting offers on properties already. But the commitment email itself is very helpful, even for you. And if the client agrees, I do mark a copy to the realtor as well, because now it gives you like a comprehensive information. It's not the client telling you, oh, my budget is $600,000. It's now a specialist telling you that this is their qualification. This is how much down payment we are assuming. And these are the assumptions that we are making. Sometimes the assumptions would say, oh, because the client tells me my credit is fantastic. Okay, so my assumption is your credit score is over 650 at least. Because everyone's understanding of fantastic could be different. I've had clients tell me my credit's fantastic. They don't know what's happening at the back end, because when I pulled their score, there was some identity theft and the score was about early 600s. Now that almost jeopardizes the deal for us until we get that resolved with Equifax and TransUnion. So those are things that we kind of learn as we go on. The next thing that we do then is the documents. That's where the underwriting part comes in. We receive their documents and validate the numbers that we had run originally. So we'll send a follow-up email saying that thank you for your documents. This is your new budget, or the budget we gave you stands. And at that point, we'll do a pre-approval. When we do a pre-approval, the lender looks at the document as well. We've got lenders who will underwrite the pre-approval for you as well. And what we mean by that is most of the pre-approvals that are done are automatic, which means that I send out an application. And as long as the credit score is more than the minimum that the lender has, and as long as the ratios are fine, they'll send you an approval. They don't look at the file. It's computerized. But there are, in certain cases, if we think that the file is complicated, there are lenders who will underwrite the file. They'll still not look at the documents, but they look at the credit thoroughly, and they look at all the information, even sometimes call me back and ask questions. There have been cases in the past where if it was a little more complicated, they even asked me for income documents. So that's how pre-approval is judged. And we decide which lender to go to for pre-approval based on how complicated the file is. Are we concerned about their approval? Perhaps we'll get it properly underwritten instead of an automatic one, which is faster. And then based on that, we give them the final underwriting decision. This is where, all of us communicate, all of us being the buyer, the realtor, and me. We all get together and we have a chat, and it's like, listen, this is what it is. So let me give you a real life example. This client told me, I work full-time permanent with this company. I make videos. Then his wife works full-time or part-time permanent at two jobs. So long story actually with her job, that she started working full-time at a company 4 years ago. And then she started working part-time also on the side. And then she had a baby. So when she returned after maternity, instead of doing a full-time and a part-time job, she ensured that she was only working part-time with both positions. Now, the challenge with her positions was that I could not use the last 2 years average because the last year she was on maternity. So obviously the number was much smaller. And that was kind of impacting our qualification. I had to use the income on the letter. And these were smaller companies. So the bank was getting a little jittery about it. As for the husband, he said full-time permanent, he turned out to be contract. So he was on contract. The 2-year average was lower. His current income was higher. So his current income was 95. The 2-year average was $80,000. With all of that put together, what we did is we did a formal pre-approval. We also talked to the underwriter. So in a couple of cases, because of the kind of volume that we do, we have the ability to talk directly to the underwriter. We talked to the underwriter and said, this is what it is. If this deal were to come to you tomorrow, would you approve it with the income on the employment letter? He said, listen, it's 80-20. I think 80% chances that I can get it approved for you at that income. We told the client that, we let them decide. And the client said, okay, I'm good to go ahead. I'll do a firm offer. Because what's the risk? What's my plan B? Plan B is I'll take you to an alternative lender, take you to a B lender. They went ahead, placed a firm offer. We sent it to the bank and it got approved. So this deal got approved at a bank. It was indeed approved with Scotiabank. And it worked through. But then the point was that there was a lot of work that happened in the background to make sure that they could be confident enough to go through it. And also they were aware that in the case that they weren't approved at the bank, we have B lenders. So they're not coming and blaming you or me, saying that, oh, now you're taking me to a B lender. We always told them in advance that it could happen. And once that is done, we get to closing. So basically, that is the entire process that we adopt to make sure that your mortgages are going through and there's a peace of mind. The reason why there's peace of mind is because we've kind of taken you through the entire step-by-step process, right? If you guys have any questions or comments, obviously feel free to pitch in and put that in the comment section or unmute yourself and ask. I wanted to kind of just make a quick introduction and take you through the process anyway. So this is not like super formal. Christine is an amazing friend of mine as well. So, you can ask her and she can relay the questions as well, whatever that works for you. I wanted to also share quick market updates with you about what's going on in the mortgage industry, something that you guys would perhaps be interested in. I think you've already had a presentation about the change in the qualifying rate, which went up to 5.25. So what that does is that has reduced the qualification by about 4 to 5%. So it's not a significant change for buyers who were already there in the market. So let's say if they could buy for $1 million, it's gone down to about 950. So it's not that it's not the end of the world. Perhaps they'll have to readjust their expectations. That's all that it is. But the kind of media coverage that it has had, the amount of communication that's going on about this change has made it feel like that it's a big change. What's also interesting is that these changes happen all the time. Say about a few months back, I had qualified people at 5.39. And then the rate started dropping after COVID and the qualifying rate dropped as well. It went down all the way to 4.79. When it went up to 5.25, the only reason why it got so much attention was because the change was significant. And it was kind of coming out as a policy to cool down the market, but it doesn't seem to have a significant impact. And basically for whoever has question about qualifying rate, what it is that we work with ratios, right? So we have your income on one side and we have your expenses and your liabilities on the other side. So when it comes to the expenses, when I calculate your mortgage payment on the subject property is the one that they are currently refinancing or buying. For that property, instead of calculating the mortgage payment at the rate that they're being offered, which could be 1.2, 1.3, 1.4, I calculate the mortgage payment at 5.25%. That's what it is. That's how qualifying rates work. And if you have any questions about that, you can ask about that too.
We have one question from your previous
Go ahead.
slide. It's Addie was asking, how long will the process take? I guess what we were talking about before, the qualifying process.
Yep, let me go back. So this basically, if we were to look at, so this qualification can happen the same day. So I was introduced to the client, I can run their qualification and the email can be sent out on the first day itself. Now, documents, it depends on when the client send me the documents. But let's say that they sent me the documents the next day, day 2, I'll get the pre-approval done in about 1 to 2 days. So let's say 4 days. And we'll have the underwriting decision. So it's pretty quick. And once you have an approval, my lenders come back to us with a firm approval within say 4 to 5 days, 4 to 5 working days. It's not a very long process. It is just the time it takes in arranging documents and then the time it takes in finding the properties. Good. Did I answer that question?
Very good. Thank you. Yes, Saraf, we have a question in the office. What's up?
So what if you sold firm on a property and now the mortgage isn't approving?
If you sold firm on a property and the mortgage isn't approving?
Because initially the client got a pre-approval, like a mortgage pre-approval.
From where?
From the bank, like
so client got a mortgage pre-approval and now they've gone firm and the bank actually, okay, so it's about your deal, right? So the bank wasn't approving now because the property is under 500 square feet.
And I did not know that before doing that. So
Mhm.
it is my mistake, but
Mhm.
like right now, if like what is the course of action? Like
I would
the other
assume
party
B
is-
lenders and private lenders, I guess, Mohit, would be the answer.
No. So the properties under 500 square feet, is that the only problem?
Yes.
That's, yeah, the only problem. Otherwise, the bank was saying he was approved for the
Yeah.
amount.
His income is okay, credit is okay, like everything else was fine.
Is the credit over 700?
Yes.
Yeah, he'll be approved. I recently got someone approved at 380 square feet, with Scotiabank.
All right, I guess I'm gonna have to come talk to you then.
She's gonna have to call you after this.
No problem. If it's just the square footage, it's not a big deal.
Okay.
Yeah,
Because what the banks sometimes do, if they've pre-approved you and maybe they made an error, because like I said, they've not done a formal pre-approval, it's just a qualification, and they've made an error, they perhaps look for avenues to decline. There could be more than just the square footage, because I've not seen someone being declined for square footage with good credit.
Okay.
How small is the property?
375.
375.
Yeah, we can give that a shot. It should work out. And then there are obviously people on the alternative side too. What's that? Sorry, Christine?
One more question in the office here.
Yeah.
Yes.
Hi. So brother and sister, one brother has 50,000 per income, income, and is a first time buyer.
Okay.
So I hear that now they multiple 50,000 like 153 times or something. At the same time, how much he can approve for the mortgage and 5% down because he's a first time.
First time home buyer, 50,000 income, 5% down. How much can he approve for? He, Baskrin, who's asking you the question, was saying that he heard that they triple their income or something.
No, it's a rule of thumb is about 4 to 5 times. So I'll say anywhere between 200 and 250K. But it's best to kind of run the exact numbers, see what their liabilities are like as well. Right now, I'm assuming no liabilities, but a lot of factors are involved in running that.
Yeah, they have credit score 800.
Credit score 800.
Normal liabilities and perfect.
Normal liabilities, like you have to know how much, like what are their debts?
Yeah, they don't have debt, they say that's why.
No debt.
Yeah, no debt.
Mm-hmm. Well, you can. I'm going to push out Mohit's information so you have specific scenarios.
Okay.
He can totally look into it for you for sure.
Thank you.
Yeah. All right. Continue on.
Yeah, happy to help. Okay, so one thing that's also changed is CMHC had last year changed their guidelines and they had made it stricter. So I guess all of you know about the ratios that mortgages work with, gross debt ratio, GDS, and total debt ratio, TDS. It used to be 39 and 44 for every insurer, which was CMHC, Genworth, which is now Sagen, and Canada Guarantee. But CMHC had dropped it to 35 and 42. And plus they had also made the minimum credit score to be 680. So if the buyer had a credit score of less than 680, they wouldn't approve it. Mm-hmm. That has changed. CMHC has returned to their original guidelines, so 3944. And I think the minimum credit score has also been reduced to 600. So that's one good change, which means that now you have more options for your buyers. Back in the day, at least in the last year, we only had Canada Guarantee and Sagen. And if they had a problem with the buyer of the property, we couldn't go to CMHC because of the stricter guidelines. Now we have all three available. So that's good news. I don't know if you guys know about this, but HSBC has entered the broker channel, which means that mortgage brokers now have access to HSBC as well. And CIBC is in the process of entering the broker channel as well through Simply Financial. So that's exciting news because now if your buyers are like AAA clients, which means that the credit is amazing, the income is amazing, the property is standard as per HSBC's guidelines, you can offer them rates as low as 0.99% variable for 5 years. So there are some phenomenal rates available with HSBC. They've got a couple of good products as well. And on the alternative side, if you work with any buyers there, the alternative lenders, which is the B lenders, are coming up with non-compliant products where, you know how the TDS is supposed to be 44%. They are willing to allow the TDS to be up to 60%, which means it will give more flexibility to self-employed individuals and and people with lower income. But B lenders do require 20% down payment. So you have to keep that in mind. So basically that wraps up what I had. I wanted to make kind of a quick informational slide. But if you have any questions, like I said, right now or after the presentation, I'm happy to answer those.
For sure. Let me just, oh, can you stop your share? Let me like check it and see who's online, if they have any hands up or anything. So anybody online? Any questions for Mohit? Any specific problems you're having right now for approval? So you've never heard, I thought that under 500 square feet was sometimes a problem with lenders. I heard that before Saraf's deal.
It is a problem, yes. So under 500 square feet is a problem with lenders, but then there are certain lenders, certain banks who would allow that as long as the credit is good and the income is good and all of that. So like I said, I recently got a borrower qualified and the property was about 379 square feet.
Okay.
The location depends as well. So if it's downtown Toronto, it's obviously preferable.
Or it's Oshawa, isn't it?
No, it's Oshawa.
That's fine again, because again, it would be new construction. If it's that small, it'll be newer, right?
It's more like student housing. It's up near the college, right? So yeah. So
maybe that's the reason for the decline. That could be the reason for the decline. So if it's a new build and if it's being marketed as student housing, a lot of the lenders just blacklist those buildings. They don't want to lend on it.
That's what I heard, that the building was blacklisted.
Yeah,
really?
Could be. We can take a look at that because if they bought it, we have to get them the mortgage anyway. So you can figure it out.
Thank you.
You're welcome.
Anybody else online have a question there for Mohit?
All good, it seems. So
Yeah.
Christine had number, everything.
Yeah, I have Mohit's number. I have everything, so you guys can contact him if you need anything. I guess, what was I going to say? I totally lost my train of thought there. Yes, he said he's Ken Baskaran and he's going to contact you. Remember his name.
I will.
He needs to call you for his clients.
Definitely.
For sure. So you're saying that we can go in with as little as 600 credit score now? Is that what I heard on the last slide there?
Yes.
Just
the number though.
When we're asking our clients, how much do you make? We can kind of figure out numbers in our head a little bit with our clients. And I'm usually, that's one of my questions. What's your credit score? And I'm looking for that minimum of 650.
Yeah. What I can also do is I'll try to see how best I can do that. But I have an app. So DLC helps us with like a mortgage application that we can share with you guys.
Right.
So I can share it. And when you're talking to your clients, you can just run their numbers on that app. Although it's going to be an approximation, but it'll at least give you an idea before you decide to pursue the client any further.
Right. Okay. We see a huge push on people purchasing recreational properties right now. How are you with those mortgages? I know that the banks are usually a little more stringent when it comes to that recreational property.
Oh, yes. We are okay with second houses. Second homes is fine with us.
Cottages, what I mean. We see a big push, people buying cottages. I've seen so many deals come through the office lately. It's crazy. Usually you don't see them that often, but I think people just need that space, right now with COVID to go. So a lot of our clients are looking, there's big bidding wars in cottages and Kawarthas and Muskokas and you've never seen bidding wars on these places before. So what about the mortgages? What should we know? Because I know banks not only have a problem with the recreational properties, but they also ask a lot of questions when you're on well and septic and stuff like that. So stuff that we should look out for that.
So if you're going to the bank, well and septic should be fine. They may cut down on the loan to value. So let's say if you had 20 down, they'd say come up with 25 down or something of that sort. So it's not significant but they want to make sure that the property is accessible 12 months of the year. Okay. So that's first. They want to make sure, you have to qualify. You cannot show a cottage property as a permanent rental because they know as well that you cannot rent a cottage property. No one's going to come and live there, right? So it's going to be an Airbnb. You can't show it as Airbnb. So that means that your income has to qualify your primary residence and the cottage, both of them without any rental income. So that's why the banks are finding a challenge because they've still not come to terms with short-term rentals like Airbnb. They've not allowed it yet. but the B lenders do. So the banks, if you do not have enough income to qualify with the banks, we always have B lenders that can come pitch in and help you out with it.
Okay. Okay. And you said because well and septic, they might ask for a little bit more down.
Yes,
so be prepared
exactly.
a little bit more down.
Absolutely.
Okay.
Could be, not always, but sometimes. It always depends on the kind of property it is, the way it's kept, how old it is, and accessibility and all of those factors.
Nothing on 3-season cottages then. They won't do.
They would perhaps do it, but the loan to value will drop significantly, perhaps even 65%.
Okay.
They are really concerned about accessibility. They want it like a full year cottage.
Okay. All right. Good to know. Good to know. Anything else you guys are having trouble with that you want to ask? I think it's a scary process anyways, because I had a deal last year fall through. My client had come to me and she said she was 100% pre-approved. Show me your pre-approval. It was great. It was fine. And then she went to go purchase a building in a condo in Oshawa. Yep. We went in firm. We won the bidding war that night. We came the next day. The bank had approved it, but CMHC declined it. They had said that CMHC wouldn't take into account the fact that her OSAP wasn't in demand to be paid yet because she wasn't finishing school for 2 years. But because she did have it taken out, they wouldn't approve it because they were considering it like she had to pay it back, even though she showed them the document. It was a zero payment right now. It was a crazy deal and it had to fall through. I had to go back. They went to CMHC, they went to Genworth, and they were all not approving it for the same reason, even though she proved that it's zero payment right now.
How much was the OSAP amount?
I don't know, because the thing is that when she called to find out how much it would be monthly, they determined that they couldn't give her a monthly fee because it wasn't due yet, right? It wasn't due until she was finished school for another 2 years. So they couldn't give her an amount. Do you know what I mean? Based on that. So they gave her a letter saying there was a zero payment due right now monthly, and they would not, and like I said, the bank approved it, but it was CMHC and Genworth that were saying no.
So going back to what I was saying in the presentation, when you're doing qualification and pre-approvals, one of the questions I asked is, has the mortgage specialist done their underwriting, right? They have to do it thoroughly. Now, it is a thumb rule that if you have OSAP without any payments right now, you have to assume 1.5% every month. Okay. So the bank rep,
well, I guess that's what they were doing then.
Yes, the bank rep didn't know about it. They pre-approved. Because the point is, even when you do a pre-approval, you send it to the underwriter, they rely completely on your information. Mm-hmm. And if you do not know how to present the information, if you're missing on important aspects, then the underwriter wouldn't know. Mm-hmm. So the buyer thinks they're pre-approved, but these minor things could make a difference. So with OSAP, always if there's no payment, 1.5% of the outstanding balance is going to be the monthly payment. And if there's credit card balance and line of credit balance, then it's 3% of the outstanding balance.
Very good to know, because that was honestly the first firm deal that I'd ever had fallen through. And luckily the listing agents were amazing about it. I went back to them and they were like, okay, no problem. We'll go back to the person who was second in line last night. And they went back and were able to recoup the deal with that person. So thank goodness they released my client. But if they weren't so nice, we could be getting my client into a lot of trouble at this point. You know what I mean? Because now she's single mom, 4 kids. Now she's going to have to go and find B lending or private lending. And, it would have been a nightmare for her. So definitely a scary situation. That's why I say we all have to do our homework before we take our clients into firm deals. And it's a good thing where you said, do you know if your client can put in a firm deal? How do we know that our clients can put in a firm deal? Because you have to be in close communication with whoever they're using for their mortgage agent, right? To understand that it's a pretty solid, 100% almost yes, you know what I mean? Before you're putting these firm deals together. Because I know we're trying to win the bids and we're trying to win the wars, but it's worse if we win it and then our client can't close, right? There's more repercussions that way. So
yeah, I'd say talk to the mortgage guy, because if, let's say, a lot of times what I've heard from friends I have in the industry, if the clients have an approval from the bank, they'll show you the letter. And it's good to go, you start showing them the properties, but it's sometimes good to talk to the person who did that pre-approval and ask them, how confident are you? Can you get them approved? This is what I'm looking at. What I also tell my clients is, if you're buying anything, if you like something, send me the MLS. Yeah. Going back to that point of assumptions, because I've assumed the property tax and the heat and all of that to be a certain number, but it could be different when you look at a property. It could be higher. and that could impact your qualification, especially people who are on a tight budget. So they cannot come up with the extra $4,000 or $5,000. It could be big trouble for us. Absolutely. So before they buy, I ask them to send me the MLS. I rerun their numbers and I make sure that they can put an offer for that property.
Yeah, no, absolutely. That's a good advice for sure. Keep in close contact with whoever your clients are using for the mortgage and get those answers directly. Because a lot of times our clients say, oh yeah, no worries, I'm pre-approved for 800. And meanwhile, they've just done a preliminary crunch and they haven't really submitted any, like you said, any documents or anything to their mortgage brokers, right? So it's a scary, scary process these days for us. But that's like I say, I don't mind being in a little slower season where you can negotiate price and not have to do those firm deals, because
trust me,
it the stress out of it for us, for sure, because then at least we can get our approvals done. But unfortunately, it's not been the way it's been for real estate for a while. So
yeah, we have to just live with it.
Yeah, for sure, for sure.
And I want to in the HSB,
yeah,
CABC,
yeah,
variable for 5 years for 0.99.
HSBC and CIBC, you said the variable for 5 years is 0.99?
Okay,
or sorry, 0.99?
0.99.
Yeah, just HSBC.
Just
CIBC.
0.99.
0.99, yeah. Yeah.
But now
5 year variable at 0.99.
Normal mortgage is 1.29, not now.
Normal is 1.29 right now, he's saying, regular, standard?
Regular as in conventional, 20% down payment?
20% down payment? Yeah.
That's, 1.24.
1.24.
Thank you.
Very good, very good. Everybody good online there? No questions for Mohit? Like I say, I record this. So what I'll do is I usually push out the recording to our, all of our agents, and then I include your contact information. So I'm sure you'll be hearing from at least Saraf and Ken. So just let me know if you need anything, guys, and I'll push out Mohit's information in the email.
Thank you, Christine.
Thank you very much for joining us this morning. It was very informative. Thanks, Mohit.
Thank you. Thanks for having me. Bye.
Thank you. Have a great day.
You as well. Take care, guys. Bye.
Bye-bye.